Hi, welcome to the channel. I'm KCY. I'm a 4-time MDRT qualifier and a certified master trainer. So I've been in the financial advisory business for about 14 years now, and what I do for my clients is advise them on the financial portfolios and how to optimize them and make them work better for them. So today I'm going to talk to you about what a speculative investment is. So we have many different type of investments in the markets. I know that you might be aware of them and you might be already involved in some of these investments, but I really want to talk to you today about what makes an investment speculative and what makes an investment not speculative. What is a speculative type investment? So any investment can actually be speculative depending on how you look to it. So let's take an example of a person investing in the stock market, for example. So right now, as I'm recording this, there's actually the COVID-19 pandemic that's happening around the world. And during this pandemic, there are many companies or biotech companies that are developing vaccines, or pharma companies that are developing vaccines to help combat this pandemic. However, none of these companies have come up with any vaccines as of date. But some of them have contracts with governments, some of them are on trial, some of them are trialing drugs and things like that. But some of these companies that are developing those vaccines actually have no other products or no fundamentals to back them up. In other words, they can be companies that are fully funded by investors or shareholders, by probably a venture capitalists and other kind of private investors, and they don't actually have any basis, like they don't have any other drugs that have been launched. They're not selling any products. It's all just investment going into this company. If you're going to a stock like this and hoping that this company is going to, for example, develop a vaccine, that is what I would call a speculative type of investment. So it's not really the investment that's speculative. Sometimes it can be the manner you treat this investment. So it's not to say that the stock is not there, the stock is not valued, it's regulated and everything, but the way you look at it and the returns that you want from it is very speculative. So as long as you understand what you're going into, not a problem. Again, I'm not saying you shouldn't go into investments like that. They could develop vaccines, but again, where are the fundamentals? What are the expectations? So it's more of how you look at the investment and how you treat the investment product rather than the product itself. Sometimes the product can be very sound. It could be a very good stock. It could be a good investment product. But because you're looking at it and you're speculating on the returns, you're speculating on things that are coming up, there's no basis for it, then it can be a speculative type investment in your portfolio. So I'm going to go through 8 points with you. And at the end of this video, you should be able to tell whether your investment or the selected investment you're planning to go into is speculative or probably fake. So number one, the most obvious telltale sign that investment is speculative is the returns. It's not to say that good investments do not give good returns, but normally the more speculative an investment is, the more likely that the returns are very inflated or have no basis at all. For example, if an average return in this product or this class of products is giving 10%, and this one is giving about 15 to 20%. Not too bad, but it's probably something you should look out for. Number two, is the investment product regulated? In other words, is it actually approved by the central bank in your country, or is it a product that has been approved by the relevant authorities? If this product is approved and regulated by your central bank in your country, then most likely it is not so likely to be a speculative type investment, because there are rules and regulations that the government forms to prevent abuse of such things. There are many situations where I've seen and spoken to people and potential clients who go into wrong investments, or they go into something that or they go into an investment product, for example, that returns very, very well, but actually it's not even a real investment product. It's probably a scam, or it's a speculative type investment. So the salespeople for these products will normally tell you things like, it is not regulated because it's a very special product, or it's a product that, they have not gotten any regulations yet, or it's a product that they have not gotten the approval yet, and you're getting it fresh off the stove, and therefore you're one of the first few people going to this product. And because you're one of the first few people who go into this product, you're more likely to make a higher profit than the people who come in later. These kind of things are very dangerous, and of course, there is a reason why they have not been approved. Normally in your country, Like if you live in Malaysia, you can actually check online to the Bank Negara website and to see which are the financial institutions or products that have been approved and are regulated. Number 3, does the product require you to refer friends or clients to give you better returns? So this is something that's also quite common and is a big telltale sign that this could be speculative or even maybe a scam. So what they will tell you is they're not conventional investment products, and that's why you need to reach out to your own personal social circle. So what they will tell you is that you can actually earn more money by referring your grandmother, your father, your mother, your brother, your sister, your cousins, or people around you, or maybe a social circle, maybe a religious group, someone that you know in your office, co-workers and things like that. I remember once there was a very, very popular investment product that required people to refer people, and every time you referred somebody, you will get points, and at the end of the day, you will use these points to redeem certain kind of extra money on your investment products. And I remember hearing about this in the marketplace, and true enough, when I heard back from this same person who shared with me about this product, they realized that it was actually a scam and they've lost all their money. So don't fall into such traps. Number 4, do some research on the background of the companies that are offering these products. If they are registered overseas and not regulated locally, it is more likely that there's a certain amount of risk that's involved, and it's more likely that it could be speculative or it could be a fake investment. So what these salespeople will tell you is that these products are registered companies or big companies that are overseas and they've been registered in Hong Kong, Singapore, or other financial countries around here. I mean, the only reason I say Singapore and Hong Kong is because I'm recording from Malaysia and it's an Asian country. They will sometimes even tell you that the company is registered in America or in the Europe or in UK, different countries. So that's a reason why they are not registered locally as well, because the local laws require some kind of regulation. They will probably show you pictures and maybe websites and things online and show you the paid up capital and things like that. They could be true, they might be fake, I don't know. Plus, you don't even know the laws that are overseas, so you don't know what are the laws that are regulating those companies as well. I mean, anybody can set up a company. If you want to set up a company in Malaysia, you can get an accountant, you can get some people, they can specialize in setting up companies, and we can, you can actually operate overseas and call it investment product. It doesn't work that way. It is a very big warning sign. If you come across an investment product like this, it's good to have a little common sense and to be wary of it as well. The 5th telltale sign that I find is very common for speculative type investments or probably fake investments is they will actually show you a certain chart or a point system that tells you maybe how much they've earned from it, and probably they are also a person who is referring you to go into the program. So that's another telltale sign. They'll show you their bank account or probably fake bank accounts. They'll show you maybe some famous people in there, a celebrity or somebody that you might know locally whom they say has also invested into this product. So that makes it more and more dangerous as well, and very rare. And I'll be very wary about that, because that sounds more and more like a speculative type investment, or most likely it can even be a scam. Number 6, is it tied to a point system? Is the returns of your product or that product that you want to buy tied to a point system? If it's tied to a point system, again, I have reservations on this, because anything that's tied to a point system means that they can change the investment return, or the investment return of a product can alter very much depending on what the value of the point is. So I have heard programs where they tie the value of the points to US dollars or a certain currency of another country. But of course, you are not factoring in the currency risk as well. If points are tied to a certain currency, that means that they can vary and can change this at any time that they want, even contractually. Now, these are probably not sound investments. They are very, very dangerous. They're very speculative. I would suggest, if you're going to go into them, be very sure what the risks are and be very sure, what you're in for. So I have another video that you can click up there and you can learn more about what the difference is between savings and investments, and having a certain portion aside for savings and another portion for investments. So you should never mix investments and savings together, and investments should also be only done after you have done your basic savings. So if you like this style of video, make sure you subscribe and hit the bell icon so that you'll be notified on any new videos that are on my channel. Number 7, One very major telltale sign of a speculative investment is also probably when they guarantee you the returns. Now, let's be honest, most investment products out there do not have guaranteed returns. Okay, that is why it's called an investment. If they're selling you something that has guaranteed returns, I would be very, very worried unless they are very regulated products, such as financial products. For example, if you are buying an insurance type product in an annuity program or something of that sort, it will not have and should not have any guaranteed returns. Because an investment is an investment. If you're going for a guaranteed return product, or if somebody tells you an investment product has a guaranteed return, you should be very wary and you should look into the terms and conditions. In fact, I would ask them, and I will ask a salesperson, why do you say it's guaranteed? If you say it's guaranteed, please show it to me how. Sometimes they will tell you stories like, hey, we've been making so much money, the trend has been going up for a long time, it's always upside, even during this crisis or during certain times, people are making lots and lots of money. They will play on your greed, or they will play on the emotion of greed, and they will also play on the emotion of losing out. And that's how they convince people that this return or this product is definitely going to return and it's pretty much guaranteed. They'll say something like that. But actually, there are rules and regulations that you can't simply say an investment product is guaranteed unless it really says so. If somebody comes to me and tells me that an investment product is guaranteed, I would make sure to check the contract and look at the fine print. Does it say guaranteed anywhere? It has to say guaranteed. However, having said that, some companies or some speculative type investments have the term that's actually in the contract or in the investment product that tells you that the product is guaranteed. Now, again, if it's guaranteed, look at the company. So go back to number 4 when I was talking about, is the company registered locally or is the company registered overseas? So if the company is registered overseas, again, you must know what kind of company is guaranteeing this type of product or this type of investment returns. Because if it is a small company, it doesn't really have that much of a cash flow, doesn't have capital, doesn't have basis. You don't really know about it. They could actually just the whole company could just close down, and that way you might end up losing all your money. If the company closes down, doesn't matter what they guarantee. So if they're guaranteed investments, make sure it's from a very reputable company or very big company, and possibly better still if it's regulated by a certain industry. So for example, I do sell products. We have products that are guaranteed returns, which are a mix of a hybrid of guaranteed returns and also investment returns for an insurance type product. But these are regulated products and they're from insurance companies. And these insurance companies, for example, are very, very large and they've been around for 40, 50 years. Then, that makes sense. Of course, it doesn't mean there's no risk. Everything there's a risk. Every investment has a risk. You have to understand that. If you can't take the risk, don't go into investments. Which comes in to my last and 8th point. That is, when the salesperson tells you that there is no risk in this product. There is no such thing. There's risk in every product, even a very normal fixed deposit account. If you're putting your money in a bank, there's always risk even. What's the risk? Very simple. The risk is that the bank becomes insolvent. So risk is there all the time. It's just the varying degrees of risk that's important. So you got to identify how much risk that you're able to take. And if you don't know how much risk that you can take, there are ways, and if you meet a financial advisor and you meet people who are actually in the industry, they will have to talk to you about a risk profiling questionnaire. So what I do with my clients is, every client that comes to me, any product they buy, they have to fill up a risk profiling questionnaire. So it'll tell you based on the exposure you have in the market and what kind of risk that you are likely to be. Are you a person who can take more risk? Are you a person who can take less risk? Or are you a very conservative type investor? So these are things that you can do. So I'll leave a link below of a risk assessment tool that you can check out. These are free and you can check them out online and see what kind of risk profile you are so that you're aware of it as well. So when you go into any investment product, at least you have that kind of awareness. So let's go back to it. So there's no such thing as no risk. Everything has risk. If you walk out the door and you cross the road, there is a risk that anything can happen to you. A car accident can happen to you. There's even a risk that something can fall from into the sky. Of course, the degree of risk is different. It is not as high, okay? But it is not accurate to say that investment does not have any risk at all. That would be a very big red flag to me as well. So there you go. If you like this type of video, make sure you hit the like button, click the subscribe button, and also click the bell icon so you'll be notified of any future updates and any new uploads that I have on this channel. Thank you very much for watching, and I see you next time.